So today, I want to talk about Australian house prices with the perfect storm of factors to create this overinflated market and when that's going to come to an end. So firstly, house prices were already unaffordable for most and was on the rise just before the coronavirus hit. It started rising as soon as the Liberal government won the election again and came to power, and was climbing right up until February in 2020 when suddenly COVID put the brakes on everything and pretty much the entire housing market dropped about 5% or so. But since then, in the second half of 2020, house prices has really started to pick up. The median house price has now reached $1.1 million in Sydney, and Melbourne's not too far behind at $860,000. In March alone, house prices increased by $50,000 for the month, which is almost about $1,600 a day. Now, on average, the average Australian salary of about $70,000 a year after tax, you'll get around $400 in hand per day. So just purely trying to save enough money for a deposit, you'll be falling behind by $1,200 a day. That's pretty depressing when you think about it that way. And I think this latest boom in house prices is all due to quite a few factors that have come together at the right time. So firstly, let's have a look at this graph of interest rates for the last 30 years. We've gone from a high of 17% in 1990 to just 0.1% now. So let's just call it that for what it is. It's basically 0%. So since money is so cheap and easy to get access to, and there are much bigger pockets when people go to auction, and that's why prices are selling for about $300,000, $400,000, even $500,000 over the reserve. Check out this house in West Ryde, Sydney, which made the investor more than $415,000 just by holding it for 9 months with no renovation. He would have incurred some stamp duty and land tax, but gosh, that's the power of selling in a low interest market with plenty of people FOMOing. Now, the second factor that's causing the housing boom is the low inventory of houses that are for sale. This happens because when the housing market is expected to rise in price over the next few years, owners will hold out for longer before selling to get a better price for it later. And we can see this happening as well because the total number of listings on websites such as Real Estate and Domain.com are well down this year. Look at this graph. This dark blue line here is the number of listings this year in 2021. And all the other colorful lines are the previous years. Now, couple that with a consistent 80% auction clearance rate and more, and you have the formula for a house price rocket. Now, the next big factor in house prices is the government incentives for first home buyers, which include the First Home Owners Grant and the 5% deposit guarantee scheme that's available for 10,000 first home buyers every year. And this is working well because first home buyers are making the majority of purchases at the moment. Take a look at this report from a mortgage aggregator. You can see that for the first time ever, the first home buyers have overtaken investors for mortgage applications, whereas previously the investors were outnumbering the home buyers to a ratio of about 3 to 1. And the last factor which really supercharged this housing boom is the relaxing of the responsible lending laws in Australia. This was a pretty famous wine and Shiraz court case between the ASIC and Westpac, where the judge basically said to them, "I may eat Wagyu beef every day washed down with the finest Shiraz, but if I really want my new home, I can do on much more modest fare," which basically shifts the onus of responsible lending from the bank to the homeowner, meaning that credit is much easier to get than before, when you would have had to cut down on expenses months beforehand to show the bank that you're responsible, compared to now when you can just cut it down once you get the mortgage. Now, it's still pretty contentious about who really is responsible when defaults happen, but for our purposes, it's the latest development in a whole string of things which leads us to this boom right now. So all of these factors have combined to create the perfect storm of this housing boom. But there are so many factors that also put the boom in a bit of an overinflated bubble. The first, and probably the most publicized factor, is the wage growth in Australia, which are record lows and grew just over 2% a year for the private sector and pretty much completely frozen for the public sector. If we look at this graph, the red line is the inflation rate and the blue bars are the wage growth index. And you can see that we are pretty much just keeping up with inflation at the moment. So net growth for wages is 0. What does that mean? Well, it means that house prices are rising without the market being able to fund that increase. So we're in a situation where the house prices are considered unstable, like a house of cards, and theoretically should normalize to something more in line with wage growth. And this brings me to the next point, which is the house price to household income ratio. Now, because wage growth isn't keeping up with house price growth, that means that the houses are becoming more and more unaffordable for the average person. Have you ever had a dream of chasing someone as fast as you could, only for them to get even further away? Well, that's the reality of saving for a house at the moment. Everyone is getting that feeling that by saving as much as you can, it only makes you feel more and more left behind when you see headlines like median house prices increasing by $1,600 per day. At the moment, Sydney housing price has a factor of 11.8 times the household income, placing them third in the world after Hong Kong and Vancouver. Now, that's not a title that we should be proud to keep, and I don't think it's sustainable to have such a big gap between house price and income. Lastly, our population has shrunk for the first time since World War I, thanks mostly to the COVID situation, closing our borders and therefore turning off our immigration tap. This is being felt in rental returns mostly for units and to a lesser extent freestanding houses as well. But that hasn't reduced their asking price at all. That means that for investors, it isn't really worth buying either units or houses as an income producing assets because there are so many better types of returns out there. So they've left it to first home buyers to fight it out on the basis of FOMO, which again isn't a sustainable way to value things. So at this stage, the factors for house price growth are outweighing the factors against growth. But what's going to happen in the near future? Well, the truth is, no one knows, and if they tell you they do, they're lying. It's as good as asking what the weather will be like in the next few years. But we have a fairly good idea of the upcoming trends based on what the economic conditions look like right now. And this is what I think house prices will do in the next few years. But feel free to disagree with me on any points in the comments down below. I'm more than happy to start a conversation on this with you guys. First, house prices will continue to go up in the short term. No question about it. The combination of low interest rates, low inventory, high first home buyer demand thanks to the government incentives will drive the market up, especially if the first home buyer deposit scheme continues for another year, which at this stage there's no reason to think why it won't. Then it's likely that our borders will start to progressively open in small travel bubbles, which will turn on the immigration tap again and cause rents to go up, and thereby driving the prices upwards as well. But it's also likely that that might take longer than expected. So that's going to be a bit of a variable. What will curb house prices though is the explosion of mortgage sizes and credit that the APRA was seeking to control earlier. I think that even though responsible lending laws were relaxed, the banks will be pressured to tighten lending criteria at least and control house prices somewhat to some degree. Now, I think that the main hurdle for the housing market is a federal election that will happen around mid to late 2022. If the ALP continues to push the removal of the negative gearing benefits and capital gains tax concessions, then somehow manage to win the election, then the housing market will flip and likely start that correction. But if the Libs win again, then investors will be reassured of the next 3 to 4 years again, and that assurance should keep prices to continue to rise. And then between 2023 and 2024, the RBA has indicated that that's when they'll start to flex their muscles again and raise interest rates again. That will have a strong effect on house prices and very likely be the final necessary correction that we're going to have. Of course, all of this depends on the progress of the economic recovery as well, because it seems like the economy and the housing market are completely separated at the moment, and we only really have one tool to control both of them. And we are obviously going to favor growing the economy over controlling the prices of housing markets. So that's the state of the Australian housing market recently and in the foreseeable future as well. Let me know your thoughts in the comments down below. Hit the like button if this was helpful, and as always, I'll see you in the next video.